Let's go ahead and start our analysis using Amazon to represent what happened this week. Not only because Amazon represent a lot of the high flyers, it correlates very well with the Nasdaq or the QQQ, and it's my primary instrument to use for option tradings. When you are trading options, you want a equity or a position that represent technically, but also has sufficient option volume so that it is not easily manipulated, or you have more variables to use. Especially Amazon is probably the top instrument for using option trading because the value of the options are extremely high because the price is more expensive. So let's just for kicks and giggle, just summarize this week using Amazon to represent both the big techs and the Nasdaq. So you can see the big gap down on Monday, and Monday was a horrific day to trade. If you were to make money on Monday, you did very well for yourself. Technically, it was very difficult to see because there was no bounce, and essentially it went to low of day all the way to the last hour or so before you have a rally. It's actually probably the last 45 minutes. So essentially, it was heading toward low of day. You can see it was the low on on Monday, almost touched 3,300. It definitely could have kept going and meet up with the 200-day moving average, which would align with 38.2 on the Fibonacci. So that was a very likely possibility. Of course, it did rally, and that rally at the final 45 minutes was more or less due to the VIX, and we can take a look at the VIX later on. But essentially, happened was that the VIX was attacked from its spike up, and it was running higher. And eventually, at the 45 minutes before the close, it was unilaterally attacked, shorted, or sold off, or whatever. How did they attack it? I'm not exactly sure. The point was, an attack was made, and from that point, it just continued to go down the entire week. So if you overlay the the 15-minute trend line, always pay attention to the 15-minute trend line, which is the 100 candle moving average, exponential moving average, as well as the 60-minute trend line, which is of course also a 100 candle moving average. These trend lines tend to be very significant on technical behaviors, and you can ignore Monday because Monday was more or less low of day before the final hour of rally. This final hour of rally essentially allow the market to recover and behave technically. So technically on Tuesday, this is Tuesday. Tuesday is obviously technical Tuesday. Here is Tuesday. So you can see everything behave technical, and then of course Wednesday, of course, is also technical. And here is Wednesday, meeting up with the 15-minute trend line. At this point, let's just cover what happened on Thursday and Friday. So Thursday and Friday are always the most important days of for option trading. It is the most important days of the week, as because it's close to the expiration. So you can see on Thursday, you have a gap higher and an initial attack lower. This initial attack was uh, immediately followed up with buying. So you had this is called a doji tail. This is a classic. If you were able to get in on this candle or the formation of this candle, you would be able to hold for this entire duration if you trust the technical. And you say, well, how long would you hold it? You would hold it where it meet up with the 60-minute trend line. And here is the 60-minute trend line. Exactly at this level is when you would sell your call options. At which point you could try to, knowing that the 60-minute was a level of interest, what you can do is sell the straddle, which means sell one call option and one put option. I did the one leg selling, meaning I sold the put option first, and um, no, so the call option first, and then on a reversal, trying to get it to VWAP is when I would sell the other leg. Unfortunately, it never got to VWAP, and this is a new tendency that comes about in recent months that on very bullish condition, you don't get the price action to get close to VWAP because a lot of the hedge funds, day traders, momentum traders, they are now anticipating a reaction on VWAP. The algorithms may also know of this anticipation. So bullish condition would imply not touching the VWAP. So I should have known that on the third attempt of not touching the VWAP, it was going to break out. Um, I don't recall exactly, but I probably just covered that call option at some point. If I would have sold the put option here somewhere, knowing that it was gonna break higher, and then I would have covered the call option and maybe hold the put option for this duration up to this next range. So here it is. You can see on a bigger scale. What happened was that it tested the 60 minute trend line, and every time it tries to test the 60-minute trend line, it pull back down. But because it didn't pull back down to the VWAP, the fourth test of the 60 broke out and tried to get to the next level. That next level was, of course, above the 20-day moving average, which is the magenta color line, and the 50-day moving average, which is the blue line. Um, because a breakout was not sufficient, meaning traders and algorithm realized that these 2 points were rather strong levels, so having it break out without a retest of it, obviously that did not play to fruition, and so it reversed back to the 60 minutes. And of course, on Friday it was a gap down. That was a attempt of scaring out the longs, scaring out the call buyers, because there was a lot of call option buyers on Thursday. So essentially, this was market makers or front runner trying to scare everyone out. A gap down, initial attack down, met with immediate buying. And that buying, let's see if that correlated. Yes, that immediate buying correlated with the 15 minutes. So on technical, I guess this will also be technical Friday. On technical days, the 15 minutes is a very important line of interest. In this case, it was a support line and it went higher. Fail retested the 15 multiple times. At this point, if it would probably be safe to be able to buy. So this bot right here, knowing this candle, this was a classic candle, reversal candle. You can see that kind of a doji tail, and this candle led to this price action, this not explosive, but strong movement higher. So why did it stop at this point? Right at the I guess right above the flat line. Well, if you take a look at the options, and a lot of time the algorithms are basing, now this is the October 1st, which is next week, has sufficient volume. You can see a lot of time what happens is the algorithms are latched onto this technical line. This is the 5-minute trend line for the 3400 call option for October 1st, and also it meets this line. And so you can see, and of course this is the support line on the 15-minute for the actual equities of Amazon. So perfect timing. You could have gotten both the put option here, buying the call option, buying the put option, buying the call option. And if you were to execute these swings in price actions perfectly, both the call options and the put options, this would easily be 1,000, 2,000, 3,000, and more than 3,000. So this would be 4,500. So a perfect execution today would be 4,500 on just one options alone. One option being at the price of around 40 for the call option, and of course 30 something for the put options. So this was what we call technical Friday. Unfortunately, I wasn't able to capitalize too much today, just out of fear and because my account had reached an all-time high. I had been burned in the past on option Friday. Very often the option Friday's price actions are not typically Technical Friday. Today is Technical Friday, and the reason why it's Technical Friday, one reason being was that the VIX was attacked. And you can see initially the VIX was higher. This initial spike in the VIX was what brought the QQQ and probably the SPY down at the time, but then immediately it went to the flat line. And you might think, well, this VIX index more or less correlate with the SPY, not so much with the QQQ. But keep in mind the QQQ has lots of companies that overlay the SPY, and there are algorithms and programs that more or less pair the QQQ and the SPY. These are the two index of major of interest, and they are rather related brother, or if not brother, they are related cousin in the sense that they trade very much in sympathy or in tandem. The correlation between them are very high. So you can see this initial Monday spike up, and whoever made this attack, this is quite hilarious that every time you have a spike up on the VIX, this is essentially the one, two, three, four, five, and if you go back six, seven times. The last seven times there was a spike in the VIX, immediately there was an attack to get it lower. Every time there's an attack to get it lower. This is, of course, no explanation on it other than that this was intentionally attacking on it. And I think this is because there are just too many players in the game today, too many hedge funds, too many day traders, momentum traders, too many institutions, trading desk, Goldman Sachs, and a lot. There's just too many players in the game, so manipulation can be easily played. I think a lot of people are making their fortunes and their job, their career on trading the stock market, and now with other tools available you can be quite successful even though you don't have the programs, and you just gotta be able to think like a robot or as close to a robot as possible. I don't know how much longer they can continue to I guess hit the VIX, but I think the next one they will still hit it, but at a certain point, maybe on the third attempt to hit it, you have a what you call a gap, a huge gap up on the VIX, and at that point, it would just be a runaway VIX. I don't think that will happen anytime soon. Maybe toward the end of the year, but we are more or less in a safe position. Until earnings. Let's see how earnings is next month. So let's see how earnings play, and that's the other thing why I guess the sell-off was rather shallow. I mean, previous sell-off, you can see previous sell-off on the QQQ was a lot more aggressive. Every one of these sell-off was one, the very first one, the second one, the third one, the fourth one. All of them has been rather more prolonged. The intensity was stronger. These last few sell-off, one, two, three, was rather weak in my opinion. Very, I mean, I guess if you get from peak to peak, it wasn't too bad as far as magnitude, but overall, it was relatively weak in as far as how it felt, in my opinion. So let's take a look at the 60 minute. The 60-minute trend line is always a trend line of interest um, when it comes to technical trading. So here you can see the QQQ is at the 60 at this point, laying right at the 60. So you can say, well, look, it broke the 60, um, meaning it tested 61, 2, 3, and this is the fourth test of the 60. It's most likely gonna break out. Well, I mean, that is a very logical assumption. However, you can't just logically assume that until you actually see it. My opinion is that because the daily volume, let's take a look at the daily volume. The daily volume on Friday, being option expiration, was rather weak in my opinion. So, and it's sitting right at the 20-day moving average. You can say this is the second test of the 20-day moving average, but I don't think that necessarily mean anything. This is of course the 20-week moving average and its support. Now you can say this is officially a doji candle, which is a reversal candle. However, this doji candle, you can see the close is at the high. Previous doji candles, the close was not at the high, and so you have a red body rather than a red outline. And then the next week, that candle. Though that week you have some form of attack to test the the 20 the 20-week moving average on this occasion, and on this occasion, I guess on this occasion initially before it breaks out. And let's see if there's another example of that doji. So this is a very similar. This is the doji candle where you have the close at the high rather than the low, and then the next week there is some attack. Of course, this is bouncing on the 50 and not the 20, so they have a somewhat an attack to try to get it to the 50. But I think that's probably the case. So I won't suspect that Monday and Tuesday you're just gonna gap up and run. I think the best case would be a small gap up on Monday, some playing around, probably an attempt to break this this intermediate high of this new data set. So trying to break this intermediate high, I think it may be a fast break, and then I guess either Tuesday or Monday there will be an attempt to sell it off. I would say probably Tuesday an attempt to sell it off, where there may be a support around right here, or maybe right here. This will be a nice either this support, if it breaks this support, it'll be this support, and then you have the reversal on Wednesday. Typically, Wednesday is reversal Wednesday. We have been seeing recently the behavior that Wednesday has been reversing. So my prediction is that Monday, Tuesday would have some attack lower to retest or scare some of the longs who try to front run and get in, or some of the call option buyers on both the QQQ, the SPY, and also the individual stocks. And of course, always the stocks of interest on the option play is Amazon, Tesla, Apple, Shopify, Moderna, and Facebook. So the SPY, of course, is a little bit higher than the I think this might be after hour. I think it's on the close at 43. So on the close, it's pretty much at the 20-day moving average. And again, the this is a stronger than a doji candle. This is I don't know what this candle is called, but it is a bias positive candle. So I think the SPY has a bigger opportunity to retest the high than the QQQ. And of course, today the SPY did outperform the QQQ. IWM was relatively weak today, and that might be a bad signal in my opinion, because if the IWM is weak, I suppose, it may indicate that there are sector rotation, meaning people were selling the small cap. And like, it's funny how this advancer decliner line, this performance line is actually more red than green, which indicates that 65% of the equities were in the red. Of course, that is due to IWM being the small cap. So a lot of the money rotated from IWM to the QQQ and SPY. I'm not gonna look at the DIA. Let's just take a quick look. I don't normally monitor the Dow Jones, but yes, it's more or less the weaker of the three major index. The QQQ, it's right at the 50, or actually right at the 20. Between the 20 and the 50-day moving average. Normally, this DIA will perform rather in lockstep or in similar nature as the QQQ and the SPY. Let's just go ahead and look at the individual equities of interest we have, and these are all equities that are high in options volume, and also in price action. So game, of course, is sitting at the 100-day moving average. This is probably pretty negative because the short interest on this is relatively high. So they're gonna scale out any of the longs who try to bottom dip. So I would say this would game would go lower until, of course, it finds a point to go higher. AMC is neutral, but I think AMC tends to correlate with game, and normally when you have a failure of this nature, it probably would fail because there's just not enough strength, in my opinion, before it goes lower, and then there will be another attack. I think the next attack on the shorts, both AMC in game and some of the meme stocks being BlackBerry, Nokia, Express, Bath and Beyond, and those natures. The next attack I think will be a successful attack and breaking out of this intermediate high in this data range and move up to, for example, on AMC to the 60. I think we already looked at Amazon, but let's just review it real quick. It does look like it's gonna go higher. However, I do think that um, Amazon having a lot of option interest and the fact that the 60 is sitting right here, I think there, and it's also I guess this is the intermediate high for this data set. I think it's gonna probably try to retest the 60 again. And the other reason why I think that is because you can see the option volumes on the 3400 was pretty high today. Consistent volume that came in and also toward the close. This run up in, I guess, this is more or less to benefit from the options of September 24 because there's a lot of option volume on the September 24th. So, for example, the 3400, I think this run up at the end, although you don't see a lot of volume buying, it still doesn't mean that these option volume that came in on both the 3400, the 3410, let's see how that looks. Yes, so you can see that option volume came in, the 3420, that option volume came in. I think that is account for a lot of the price action in the last hour, and that's typically the case. So yes, for next week, the 3400 do have consistent volume that came in. However, if you look at the put options, there were also sufficient volume in the put option as well. So I think that these are um, enough volume. 1400 is not a small volume on the put, so I think that should be enough to try to engineer a re-attack or a recovery or a somewhat I guess an attack on Amazon, a sell-off, a mini sell-off. So there will probably be somewhat of a play to get this put higher, and of course conversely get these call option, the 3400 lower. So yeah, so the one thing I noticed also is this monitor. If you are looking at this screen, you can see a lot of the price action that comes in while it moves. So for example, on the 3400, on this initial attack, this very initial attack right here, the the price volume, of course, the price action on these puts, and also I guess the price action on the actual equities didn't seem that high. However, you would see activity that were coming in. The theoretical was starting to move, the bid and the ask was starting to move, the volume was on all the spikes, on all the strike prices were starting to move. So when you see activities on one side, these are the calls options, and the other side was rather mute. That is indication that something is going on. And if you were able to get in on this one of these two candle, you can ride it all the way up to this technical line. So I did notice that. That was something I knew before, but I just didn't really try to use it as a tool. And now I'm going to use that as a tool for when option volumes are sufficiently high, because I think this would be a very good indicator when there is a push, a squeeze, or conversely, on the put options would be the flush or the sell off. So I am going to look at this monitor a little bit, the screen a little bit closer to see exactly if I could predict price actions and option movements a little bit closer. Now, Tesla is always difficult to play in my opinion, and that is really because um, even though I did made the perfect call, oh, I was playing for this price action on the 5 minute um, trend line, and you can notice how it didn't get close to the 5 minute. Here it touched the 5 minute, but there wasn't anything that suggests that it would break the 5 minutes like it did here. So I had a call option, and of course, I had two options to buy, and I put it right at the this trend line. And of course, when it went too low, I was scared. It kind of scared me out, and I just got out flat line. But if I were to play it, here's that retest. If I would have held it, I would have had to hold it 5, 10, 15, 20 minutes of seeing my option being lower. And that 20 minutes is actually quite a long time when you're watching your option deteriorate in value. So, but eventually it did break out all the way to VWAP before staying consistent. And of course, the attack on Tesla, this was very difficult to read. I wonder if you could see that volume, though you probably can on both. Let's see how it looks on the let's see the biggest one, which is probably this guy. See if yeah, let's see if it came in. Um, yes, it did come in. So if you watch the monitor here at this juncture, where it breaks above. And a lot of time, like I said, this trend line on the actual call option, in this case the 780, these are actually trigger points for the algorithm. You can see right when it breaks it is when the volume came in, and essentially just a squeeze, a short squeeze to get all the short buy sellers to cover. And of course that wicked squeeze went to end of day high. So always end of day high when you have a push or a squeeze, very often it would end at high of day. High of days would be and of course this high right here correlate with this other high. So now Tesla is being at a point, I would not be playing at this point because the movement was too aggressive. So I don't think I will be touching Tesla. Apple, of course, got that lawsuit, and so since that lawsuit has been underperforming, did try to it did break a little bit on the 100 and recover. This was a bullish signature in hindsight. And Amazon, now Apple, because it is the biggest component of the QQQ, often would dictate the behavior of the QQQ. So this was the Monday sell-off, recovery on the 100. Let me see if that actually. Let's see, here it is. Yes, that recovery was in the last hour. Actually, it was the last 45 minutes. So that recovery was due to the VIX being attacked, but also the bounce from the 100-day moving average. You see how they're all kind of connected together. Apple, the VIX, Apple, Amazon, Apple, the QQQ, and they're all basically because Apple is so strong, its technicals are going to be linked to everything else. And of course, you can see at the close of the week, it essentially tried to test the 60. So I think this is fairly close enough to say that it pretty much touched the 60 before it fell. So this could be a it could be depending on what happened Monday. Now, if Monday is bad news, like it was this week on Monday, a gap down, anyone who tries to front run or buy in anticipation of hitting the 60, they will feel the pain and they may be squeezed out or stopped out on an attack lower. And you say, well, just one test of the 60 is very rare. Yes, it is very rare, but it does can happen because it did technically somewhat touch the 60. Now, more likely, if there isn't bad news, you will have a gap up, retest of the 60 before failing. And that failing of the 60 correlates to, of course, the QQQ failing to break out and retesting the 60, which also correlates to Amazon failing to break out of this range and go to the next level as well. So they're all tied. Technically, they're all tied together. Google is always very strong. So if the condition was better, I would contemplate on selling the straddle. I might still sell the straddle if I do sell the straddle, because I think at this point you can say it's at the 60. I think they're gonna be testing of the 60. So if I were to sell, I don't know whether I would sell, depending on how weak Google looks on Monday, I might sell the call option first and then wait for it to test the 60 and then sell the put option. Of course, if there is a sell-off, selling the straddle would be a bad execution because the increased value of the put options would override the deterioration of the call option and your position would be negative. So it's very important to monitor how it looks, the overall condition of the market, the overall price action, the volume, and if it sell too far down, just get out. Don't hold it because there's always a possibility of a continued sell-off. But that to me would be somewhat of a good strategy if barring that there's no catastrophic hit back on the VIX and then immediate sell off. So the only concern, I don't think the Google is just going to shoot higher at this point. Not until it at least somewhat tests the 60, in my opinion. Bookum, of course, is already at the next level, so I wouldn't be touching Bookum. Shopify is the one that I have been playing the straddle. Here you can see it is at the 20 and the 50. The 50 and the 20 day moving average is at the upper range. The 100 is at the lower end. So my anticipation on selling the straddle here would be any test lower. If it was to hold this support line right here, I would sell the put option and then hold that put option when it meet up with the 60. The 60 would continue to decrease, and as that price action meet the 60-minute trend line, that is when I would sell one call option, or maybe even wait for it to penetrate just a little bit like that before selling the call option. And hopefully at that point I could hold it for a duration. Holding it for a duration, I typically don't hold it more than 2 days, honestly, because reversal Wednesday or something. Typically, sometimes Wednesday, you have a high of day Wednesday or low of day Wednesday, where it's unidirectional or one directional in price movement. And anytime you have one directional in price movement, selling the straddle would be the wrong thing to do. When it's unidirectional or uniform price movement in one direction, you want to buy the straddle. So often buying the straddle would benefit if it's moving strongly. Uh, and that typically you would see is a strong rate of change. So looking at the rate of change, these guys right here, you can look at the rate of change on the 5, but also on the 15. You can look for the rate of change on the 15. If the rate of change is extremely sharp, that would more or less indicate a unidirectional, one directional movement, either downward or upward. MicroStrategy is, of course, related to Bitcoins. I think let's just look at the daily and the 15. So it bounced off of the 200. I don't necessarily think this is a bullish condition, to be honest. I think there may be another attack on Bitcoin. So I think it may be a further movement down, especially when it's still below the 60. So I would not be playing MicroStrategy until it's somewhat, down here, and then maybe see a bounce. But even then, it might be a fast bounce, so I gotta be careful on that. Eye surge or intuitive surgery. This one I think is a good straddle to play. This is more or less like Nvidia on the biotech side, to be honest. Hopefully, if I were to sell a straddle, it would stay near the 60-minute trend line for a day or a day and a half. I won't hold this one for too long. I think the potential to break out is pretty high. You don't want to hold and especially if it continues to stay around here, I might just cover the call option if it stays around here and hold on to the put option as it breaks out of this intermediate high and go on to the next level. Nvidia, let's take a look at Nvidia real quick. Always a strong stock. Nothing to, of course, it's gonna be above the 60. Very similar to, I guess this price action is very similar to Amazon or Apple. Facebook, of course, this one, of course, went down to the 61.8 Fibonacci. When the Fibonacci is close to a moving average, in this case, a 100 moving average is a very key technical line. this 61.8, you were almost assured that it would go right down to it. So it went down to the 61.8. Of course, it bounced off of it as it tested one, two, three times. It tests one, two, three times at a test. Now I think the next level would be the 60. So I think any attack on Facebook may be able to to sell the put option or buy the call options to hopefully meet up with the 60. Let's take a look at mRNA. Of course, mRNA is right at the 60. Very sometimes that indicates right now, that would indicate, because this is multiple times as at the 60, I think there would be a play to sell the straddle and hopefully make it, like here, it's in on this. You can see at this point right here, it was moving in a range bound for at the 60. So we might be at the point where there'll be another play around the 60 if you were to sell the straddle. You definitely want to use the 60 line as the median, meaning the middle of that price action range. And so I would, if I were to sell the straddle, I would wait for it to break down here, maybe try to get somewhere to this level, sell the call option, and when it gets to the 60, you can sell the put option, even though there's a good chance of breaking above the 60. You never know. Just because it did it in the past does not necessarily mean you want to wait until it breaks it too far. I mean, you can wait for it to break it a little bit, but I wouldn't anticipate it breaking too high because the chance of it reversing and then you would lose out on all that profit you had for selling the put option. Let's see. I think we look at Facebook. BABA. Let's take a look at BABA. This one is dead in the water pretty much. I think if we were to buy this guy, I mean, where would we buy it? I mean, geez, I don't know. This guy is just dead in the water, to be honest. It's nowhere close to where it's just toxic, to be honest. I would not be touching it. Netflix, let's take a look at Netflix, and we can see that yeah, it's still on the upper end of it. I don't know if I'm want to play this. I don't want to play for a correction and I don't want to play for a breakout as well. I think this is enough for today, and so let's stop the video here.